first, your net income came out at 1.57 billion euros. Very strong performance in global markets on both the fixed income and the equities front. Slightly missing, however, on the cost of risk and operating expenses. Can you tell us exactly what's been the impact of the war in Ukraine on your activities?
Yes, first of all, very strong performances across the board, and actually a very strong management of the cost, and the cost increase is related to the variable compensation and taxes. So again, very strong performances. Cost of risk, 60% comes from Russia, both onshore and offshore exposure. The rest of the cost of risk is very good. At the end of the day, it's 39 basis points under control. We are saying for the full year between 30 and 35 basis points, so it's limited. We will book the impact of the disposal of Rosebank in the second quarter. Let me just highlight that the impact of capital is actually largely booked in the first quarter. And so when we will close and when we will dispose in the second quarter, the impact on capital will be very limited.
Could you tell us exactly how much you got from the sale of Rosebank to Vladimir Potanin? Analysts expect it would cover the 500 million euros of subordinated debt. Is that all you got?
No, we don't disclose the detail. But as we said, we have that, which is, of course, something very positive, the subordinated debt and beyond.
Aren't you afraid that Vladimir Potanin would actually end up on a sanctions list before the deal is actually closed, which is something that you expect in the coming weeks?
Listen, we will see that. If it were to happen, we will probably request a license. But for the time being, as you know, he's not sanctioned, and we are moving ahead smoothly with the closing process.
So how much do you expect in terms of impact in the second quarter going forward?
As we've said, in the P&L, it's roughly minus 3 billion euro. It's a mix of depreciation of the asset, a non-cash item of 1 billion. But as I said, in terms of capital impact, we had initially communicated on 20 basis points. 14 basis points is actually already booked in practice in the first quarter. So the net marginal impact would be just 6 basis points in terms of capital in the second quarter.
How much provisions do you ultimately expect to book from your offshore exposure to Russia, excluding Rosebank, which is estimated to be around 2.8 billion euros?
Yeah, first of all, let me say this exposure is going down, has gone down in the first quarter. The NPL ratio actually remains steady for the first quarter at 2.9%. And we are giving a guidance of the cost of risk between 30 and 35 basis points for the full year, when we had said below 30 basis points. So as you can see, a very marginal effect on the cost of risk.
This is, of course, your exposure, but then you have the secondary effect of the war in Ukraine, the impact on inflation, the impact on growth. Do you expect a recession in Europe this year? And how do you position for this?
Listen, I think the outlook remains uncertain, as well as, I would say, the conflict and the final outcome. Our central scenario, the central scenario of economists, is more a soft landing of the GDP than a recession. So we've a monetary policy, in particular in Europe, which will be very progressive. And so an inflation, yes, which will remain more important for longer because of the war, also related to energy prices in particular, but then a soft landing. So that's where we stand in terms of central scenario, knowing uncertainty is there.
We had obviously the Fed decision last night. What do you expect from higher rates? Is that good news or bad news for Societe Generale, especially for your global markets franchise? Your equities revenues were actually beating estimates in the first quarter, up 19.5%, and fixed income up 22%. So how do you expect to position with those higher rates going forward?
Well, first of all, let me say I think this raise was expected, and I think the contrary would have been worrying for the markets, and we saw a positive reaction. So I think a monetary policy which will deal with inflation will be seen by the markets as normal and a good news. Second, as you said, the performance is exceptionally strong in the first quarter, in very different circumstances than last year. That shows all the hard work and the successful hard work we had on the business. It's both for fixed income and equity, and we are confident going forward to deliver very good performances on our market activities.
So we can expect this kind of performance to be sustainable for global markets, for both equities and fixed income?
You know, there's always seasonality. The first quarter is always a strong one, so not the 1.7 billion every quarter, but again, a good performance. We are positive on the good and hard work we did in 2021. It's successful.
In your opinion, what do you expect the ECB to do after this Fed decision? What do you expect the next move from the ECB to be?
Again, something probably more progressive in Europe. The inflation is not as strong, but again, a progressive normalization, probably buying less bonds, and then step by step, but progressively increasing rates.
Both Deutsche Bank and UBS have actually warned about this payroll pressure they have, inflation of wages. Is that a concern for you in the race for talent?
First, let me say, first quarter, the cost income is 10% below our guidance for the full year. We are maintaining our guidance for this full year, so we think we can monitor the cost this year. Second, I think it's probably more a US thing than the European one. Pressure is even more important in the US than in Europe. And I think that we have to build, if you wish, a relationship with our staff which is not just built on money. And I think the way the working environment, the challenges, positive challenges which are offered, the sense of purpose of the company is also important. So yes, it's certainly one element which remains uncertain, but overall, I feel also that we can control.
Finally, we had the re-election of President Emmanuel Macron about 10 days ago. Do you see any market risks with the legislative elections next month?
Listen, I'm not a politician, but when I look at the polls, you know, the voting system in the parliament in France should not lead to a significant surprise. All the polls seem to say that even it could have still a majority in the parliament.